Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Thursday morning pre-market webcast. Okay, daily chart of the E-mini, and we continue to see 1406 as a critical level. Those of you who were in the Topstep room yesterday, those of you that were over on my service, we had talked about 1398, and we bounced, went down to 1398. We bounced right off the 62% retracement. That I keep on my support and resistance chart, 1396.80. That was your low yesterday, and we bounced that and jumped on board and ripped it for about 15 handles. So I hope everybody that follows the webcast here, everybody understood that 98 was a key level if we lost 1406, and everybody was able to get a nice trade on. Where are we going from here? It's all about 1406. Just like earlier this week and last week was all about 1415. The bulls looked like they had converted 1406. They went right up to 1415, missed it by a tick, and they did not get any momentum back for the remainder of the afternoon. Went right back from 15 back down to the 6. So we're trading 1407 half. Let's look at the intraday chart. Okay, here's a 5-minute chart of the mini. We did a high we did 1410.75 about 5 a.m. Europe bought it, and they ran it up from 4.5 up to 10.75, which is a nice little 5-handle move if you are nocturnal. But the keys for me today, this entire area, and the reason I blew this up, is from the 45-day pivot down here, 1404.92. You can get my pivots on the homepage of the Topstep website or at my website, Princetontrader.com, up to 1406. This entire area is turning into a control zone. And if you win the zone, you win the day. That's what I like to tell everybody. So if the bulls can keep it above that zone, it looks like they can make another run at least to 1411, if not to 1415. If the bears take that zone, then we're looking at a retest of the 1402 area, a potential retest of 96.75. But it's all about 1406, which is nice if you're an intraday trader because you can trade that as kind of a magnet. Price goes above it, it comes back. Goes below it, it cocomes back. I mean, you can, that's been the trade for the last 2 sessions. So as a short-term trader, you can continue to look at that. The trick is knowing when it's going to break, and I would imagine that we're not going to have much more of this. Just like 1415 had to make a decision, 1406 has to make a decision, but the waters are going to be especially muddy now because we've got all the fiscal cliff issues. But you add to that tomorrow morning's jobs report. And I always tell you guys every month, and I'll tell you again, don't game jobs. Don't. You're not an institutional trader. You have no in. You don't know how the reaction is going to be. Your job is to let the report happen, see what the ranges are on the high and the low after the report comes out, and use that bracket to trade in and do your work. Okay, so everybody have a fantastic day. Use stops, be hedged. It's still a headline minefield. Some senator could say something and throw the whole thing into, either into oblivion or send it up like a rocket ship. So use stops, please, and be hedged if you can. All right, fantastic day. Mike Vacchi, Princeton Trader. I'm back tomorrow morning with another webcast. I'll do it about the same time. It'll be after the non-farm payrolls, and we'll talk about what support and resistance bracket has been created by the report. Okay, trade them well, everybody.